All right, so welcome back to my YouTube channel, and my name remains Brown Goodluck. So, however, we've made some huge progress. So, last time we talked about leverage, right? Talked about leverage, and we said leverage is the amount of money that's being lent to you by your broker. Don't worry, you understand all of this. I'll do a summary video on how you can register on your broker and connect it to empty file that we're going to be using to trade. So I'll do just follow step by step. I'll do a recorded video and I'll summarize all of this, the practical side on how to set up all of this and explain what margin, loss size, pips are using the practical side. However, margin is the amount of money that a trader needs to put forward in order to place a trade and maintain the position. So without margin, right, he deposited $130,000, right? So this is the same $130,000 is what you're going to be using to trade. This is what you're exposing to the market, to the financial market. This is what you're using to trade the financial market, right? Now with margin, right? With margin, you can deposit $1,300 and get this and expose such amount to the financial markets. I know this is somehow complex now, but just assume, let's assume you understand. Going forward, once you start doing it, you know what I'm talking about. But for now, this is the theory aspect, all right? So this is what you deposited, $1,300, but you're exposing this to the market. Why? Because of the money that margin is the amount of money that a trader needs to put forward in order to place a trade and maintain the position, right? So this now has to work with leverage. So you deposited $1,300 and your broker is now giving us extra what they're not giving us leverage, right? You deposit $1,200, they're not giving us what? Leverage to trade the market, right? So with your $1,300, whatever this guy can do in the market, you also can do it. That is what we mean by leverage and margin. I will show you all of this in the practical side. All right, so when to trade Forex? When to trade Forex? Now, the Forex market runs round the clock, 24 hours a day, 5 day a week. The market opens on Sunday night around 10 p.m. and closes Friday 9:30 p.m. GMT, right? So we'll have Sydney session and we also have Tokyo session. We have London session, which will have an overlap of New York session, right? So this continues daily, all right? This continues so you can convert this time to your own time zone, all right? So the market is always open for us to trade. All right, so yeah, four types of traders. You have scalpers. Now these guys hold trade for only seconds or minutes. We have day traders. Day traders hold trade for up to a day. We also have swing traders. Swing traders hold trade for multiple days, if not weeks. We have position traders. These guys can hold for weeks, months, and years, right? You don't bother asking yourself where you belong. Once you start trading, you fall in either of these quadrants, right? You fall in either of these quadrants. So don't bother about this for now. I already know where I am. So with time, you know once you start trading, you know where you fall into, right? So yes, now we are going more further. Of course, like I said, I will do a recorded video explain all of this using um the practical side rather. So buy stop, these are how we place order in the market. Buy stop, order placed above price and price keep going up. So assuming this is price, right? Assuming this is price moving up, this is where you place your buy order. Now once price get to this side, it should pick you up. Whether you're online or offline, whether your data is off or on, whether your phone is off or your PC is off or on, as long as you place your buy order here, once the market get to this point, it will pick you. That is buy stop. Now buy limit is this is where you place your order below price. Remember, this is where price was here. So you placed it here that once price get to this point, it should pick me up. Now, this is where price is, and you place an order here that once price get to this point, it should pick you up. Right? This is called buy limit. You already from your analysis, you already know that price will come back to this point, this zone. So when you get to this zone, pick me up. So price will come down and pick you up and start moving your direction. Likewise, the opposite side, sell. This is where price was, and this is where it's going to. You already analyze that price is going down here. So you place an order here. Okay, once price get to this point, I want to sell, right? And same thing happen here, sell limit. For show us how to use all of this. Now, market analysis. Technical analysis is a method of evaluating market by studying past data, mainly price and volume. This is the main thing. I have a friend of mine, doesn't even know all those basics we just talked about, but he can analyze very well, right? But it's good you know them. I mean, it's good. It's good you know them. I mean, you're a forex trader, somebody asks what is bid, what is ask, and you don't know, what is pips, loss size, leverage, man, you don't know. Doesn't even make sense, okay? So fundamental analysis is a technique that is used to evaluate a market by looking at underlying economic and financial factors that impact the market, right? Now, sentimental is a way of gauging how people feel about something. It can be applied to any type of content or data, including reviews, articles, social medias, and all that. So, I'll explain, we'll dwell more on the first one, technical analysis. All right, we'll dwell more. But before we proceed to technical analysis, I'll have to do a video explaining everything, the practical side, everything I've taught you all of this. I have to do a recorded video to explain um all of this, the bid, the ask, the spread, the pips, what a broker is. I'll show you everything, how to connect your broker to your MT5, how to deposit your funds too. So I will do a recorded video and I'll explain all of this, and yeah, I will do all of this first. Then I also explain how to use trading view, like I mentioned earlier. We use trading view to analyze the market. This is trading view. Um, this is trading view. So I'll do a recorded video too on how to use this guy. It's called Trading View. I'll do a video explaining how to use this. Well, it's pretty simple as long as you're using it. But again, like I said, I'll soon do a video on how to use all of this. All right. I know you've enjoyed these classes. For you to stay up to this point means you're in love or you like what we're doing. So share it to more people, like, comment, and turn on the notification bell and follow us, please, please. You see more. Don't assume that is just the forex market. Though. We've not learned anything. We've not. We're just starting. This is the major thing. This is the major thing. This is the major thing. So I'm gonna explain how to do this step by step, right? So what have we done so far? We've talked about um summary of all we've done. We've talked about multiple asset classes. What is forex? What is traded in the forex market, based on currency pair, categories of currency, major currency, exotic, and all that. Talk about bid and ask. In other words, buy and sell. Talk about spread, right? And talk about pips and pipeth, right? This is simple way to calculate it. So do a summary of all we've done so far for me. It will help you too. And also do a calculation. Repeat this calculation too, right? And yeah, lot size. We'll talk about all of this. All right. Thank you very much for your time. My name is Bran. Good luck. See you in our next episode. Thank you.